Hello everyone. We come to our very last video for chapter 11. This example problem is on page 627. It's P1126A. It's got everything in that payroll section I mentioned in the last video on those pages. All the concepts are in this one problem. It unfortunately has 5 requirements, but I put the 2 biggest ones here to save time, and I'm going to go over how we got them. So the first thing, they give you a bunch of information for this Logan White, who's a general manager of a salon called Value Point for 2018. Okay, he worked all, I got it. He made $13,600 a month, and he earned a year-end bonus equal to 15% of his annual salary. So he made, I forgot to put the 13.6 times 12, sorry. Requirement 1 is the employee's part and their deductions. So his salary is 13,600 times 12. Sorry, I forgot to put that. Everything's by the month here because we're figuring his yearly. So his salary for the year, $163,200. Very, very well paid person. And then he got 15% of his yearly pay as a bonus. That's $24,480. His total gross pay was a lot, $187,600. But that's not, of course, what he got to take home, right, every month and from his bonus. So they give you, and I did ahead of time just for a little bit of time saving so the video doesn't go on forever. The calculations for the deductions, and you can see there are quite a lot of them. This is for the employee, this is for Logan, okay? Federal tax, they said they took out $1,360 a month times 12, plus $48.76 out of the bonus. So if you add that together, I wish I had the answer for this, I don't. And I don't have my calculator with me, but anyhow, if you add 1360 times 12, you multiply that and then add 4876, you get 21,196. Apologies for not calculating that separately. And then the state tax, we have 150 a month times 12, that'd be 1620, right? No, that's wrong. 1500. 1800, what's wrong with me, plus 60 for the bonus. 1860 for the state tax. FICA, the old age survivors and disability insurance, we call it Social Security, right? 6.2%, it's easier to change to a decimal, so you can multiply. It's only on the first 118,500. This was when the book was published. Now that's up to 137,500. Most people don't make that much money, but this guy does. So they only tax up to the first 118,500 in the book. It's 73.47. The Medicare part of FICA, there's no limit. You could make $20 billion. They're still going to tax you 1.545%. So times his yearly pay, 27.21. And then he chose to give 1% to charity, to a charity fund. So that would be 1877, 1% of his yearly pay. And then life insurance is $40 a month, times 12 is $480. So he's got quite the list of deductions. Okay? No health care deduction, maybe the company pays them. Okay? So his total deductions come to $35,481. That means his net pay, what he got to take home, was still $152,199. So that's his part as an employee. But every time an employee works, the employer has to pay taxes too. They have to pay a matching FICA, dollar for dollar, every single dollar you pay your employees, and take out the 6.2 and the 1.45 for Medicare. You have to do it yourself too for every single person. So we call that the matching tax. Together it comes to 15.2% of everybody's pay. So 73.47 and 27.21 is the match. They also have two taxes that employees don't have. They don't have the traditional federal and state withholding, but they have SUTA, which is the state unemployment tax. That's for people that collect unemployment, like a lot of people are doing right now because of all this going on. And the SUTA, right, the state, which is 5.4%. Okay, but only on the first 7,000 someone makes. After that, no more deduction. So you see I've got 0.006, it's 0.6%. It's always going to be your smallest deduction. It's not even 1%, so it's not a lot. The federal just steps in to back up the states if they need it. Really the state is where the money comes from. So we have 42 for the one that's less than 1%, 0.006, and 378 for the 5.4%. Again, only on the first 7,000. Sorry, I went downhill a little bit here. I tend to do that. Total employer tax for just this one person is $10,488. Of course, they made a lot of money. We add that to the gross pay. The total payroll tax expense, taxes plus pay for this one person to the employer, the salon, $198,168. A lot. Okay, so those are the first two requirements. I wish I could flip the board and already have the other three, but there's nothing on the other side to write on this board. I guess I didn't purchase wisely. It would have been nice if I had a double-sided board. Also, the easel board would have been worth the money. Okay, so things to know that I didn't know before. Okay, so let me put requirements 3, 4, and 5, which I'm going to fit all here. It's the journal entries for the payroll. Okay, now that we did all that figuring, and what would be really nice is if I could have left that there, but then I would have nothing to write on, so that wouldn't work out. But all that figuring that I just did for the deductions for gross and net pay for Logan, and also for the payroll taxes for the employer, the salon, we're going to use those numbers, those calculations, to make our journal entries. So requirement 3, 4, and 5, and I am going to fit them here. I promise you that, no matter what I got to do. Okay, so this will be requirement 3. And I'm going to make myself a parameter here, like that. And then requirement 4, like that. And then requirement 5, like that. Okay? And they're journal entries, so I should be able to fit them. I didn't leave myself very much space there, did I? Let me make that line a little more room for the middle. Okay. That's a little better. Okay, write small, right? Okay, so we have to make our journal entries here. First one, they want the employees' taxes, gross and net, right? So we already did all the figuring. Now we're just going to put it into a journal entry. And this is at the end of the year, December 31st. This is our yearly entry if people just do it once a year, which I don't know anybody that just does this once a year. You usually do it weekly, or at least, or monthly at the very least. Not wait to the end of the year, but anyway, they did. So we have our salaries expense. I'm going to abbreviate. And that is $163,200. How am I going to do my credits? I think I'm going to put December 31st on the top. That's how I'm going to make this work. All right, salaries expense, $163,200. And then we have our bonus expense. Remember the 15% bonus that I figured out in step 1. $24,480. And now all the money we withheld from Logan are payables, and we're responsible for remitting to those how can I say, offices, like the federal tax, the state tax, the FICA, where they're gonna go. The life insurance, the charity, that's our responsibility. So to us, they're payables. So they all become payables, and they're very long to write, so I'm gonna try to abbreviate. I'm just gonna do federal income tax payable. Like that, right? And remember, that was the biggest one, 21,196. Okay? We already figured that out. And then the state income tax payable. We're calling them payables because we have to pay it. 1860. And then FICA, the OASDI, payable. It's a lot to write, even though I'm abbreviating. 7347, and then FICA Medicare. I'm abbreviating. Payable. And that one is 2721. Again, we have the math done. And then the charity payable, charity fund payable. And that was the 1% of his pay, 1877. I'm running out of room. And then the last one is the life insurance. And that was the one that was $40 a month, $480. Okay. So then the cash that he got, right? The net pay, this is always net pay. Right? The cash credit is always net pay, $152,199. And this is always gross pay. So I'm just going to make a little note. The salary expense is always the gross pay. The cash credit is always the net pay. Always, always. Right? And then the deductions fill in the blank to make them equal, debits and credits. So that's the employee's requirements for the journal entry and the payables. Now the next one is the employer. It's shorter, so that's helpful. Okay, so December 31st, we're gonna do the employers, okay? And payroll tax expense. Now the thing about when you debit the payroll tax expense, you already have to know what the total is. So that's why requirement 2 was important to do first, because we needed to know the total. So the total for the expense, we know for the employer came to $10,488. That was the matching FICA, OASDI, and Medicare plus the SUTA and FUTA. That was what we got, okay? And that we have to add those to know what that is, okay? And then we'll just simply make payables out of all the taxes that the employer has to pay. Again, the matching FICA, OASDI. Have to write this again, huh? Payable, and that is 7347. And then we have FICA Medicare, payable. Too much writing on this one. 2721, and then we have the FUTA, the federal, which is the 0.006, 0.6%, 42, and then the SUTA, which is the 6.2%, and the first 7,000 that everybody makes. And we're good, because all of these deductions come to the payroll tax expense for the employer. So we have the employee's journal entry done for the year for all of his withholdings. Payables are all set. We have the total for employer for this one person, Logan. The last requirement is we need to pay the payables, okay? And this is gonna be a long one, so bear with me, but it's the last one. So now it's time to pay. We have to remit all of these taxes to the places they go. Okay, so on December 31st, we have the federal income tax, which is going to get payable. We're going to debit all the payables. Why? Because we're paying them. So we're debiting them, just like we always debit payables when we pay them. 21,196. You can see this is from the employee side right here. And then we have our state tax payable, also from the employee side. And that one was $1,860. So we have our first two. And then we have our FICA. We can combine the matching taxes for the employee, and employer. We can combine because they're all going to the same place, right? So FICA, OASDI, payable. This is for both. We're going to add together $73.47 and $73.47 for the employer and employee, because they both have to be paid. And it comes to $14,694. That's for two, right? Then we're going to have the Medicare payable, FICA Medicare. And that's also going to be for two. And that's the 2721 and the 2721 for both employee and employer. And that's going to come to $54.42. $54.42. Okay, we're taking care of employee and employer. All set with that. So now we're going to do the rest of Logan's charity fund payable. We're going to submit that to wherever it goes. Notice we're debiting every single payable from both sides, both the employee and employer side. $1,877 and the life insurance. And that one was $480. Too bad I don't have a little more room, but I'll smush the credit at the end. And then the FUTA and SUTA, and we'll be done. FUTA, tax payable, and SUTA, tax payable. Every single payable is getting paid with regards to this Logan person for the year. 42 for FUTA and 378 for SUTA. Finally, I have them all debited. Every payable. So we got 2, 4, right? 5, 6, 7, 8, 9, 10. All debited. 10 debits and 1 credit to cash for a total of all of them. Cash gets credited for a total of both the employees' expense, the 152, I'm sorry, that's not right. These, the 21,196, 1860, the 73.47 times 2, the 27.21 times 2, 1877, 480, $42.378. If you add those all up for the two combined, it comes to $45,969. I'm trying to make this look like a credit. Doesn't really look like a credit, but it's goes over there. Okay, so I had to total all of these in order to get the total taxes for both. It's totally done. Sorry it was a little on the long side, but hope I made the time limit. Excellent. Okay, we are done. Let me know if you have any questions. I'll talk to you soon.